Okay, welcome everybody to the second seminar of our research group, which consists of not only the University of Rotterdam, Erasmus University, but also the universities of Bologna, Münster and Valencia. And we are always doing a tour along all those cities, and in each city there's a seminar being organized by this group. And today the subject of our seminar is VAT on import and customs valuation in e-commerce. And that's a lot of topics in a very short sentence, as you will see today, because we have a very elaborate program with all kinds of topics and issues being discussed in relation to this subject. And as I said, because there's playing a lot of things, of course, if you talk about customs, how do you say it, the fact that VAT is also levied on import, and we see a lot of cases of the Court of Justice popping up, which sometimes have very surprising results, I would say. So it's getting more and more important, and certainly, of course, also with e-commerce being more and more important, maybe the biggest issue at this moment for customs. And there we, of course, also see the relationship between customs legislation and VAT legislation. So that's a little bit what we are going to talk about. You may have seen the program as Martijn has distributed it, and somebody else, other persons as well, via LinkedIn and other social media. We have shuffled the program a little bit to make it more logical in terms of the subjects that we discuss. So here's the program, what we're going to do today. The welcome address and introduction is now, as you understand. No, but then our Italian colleagues from the University of Bologna will discuss the interplay between VAT and customs. And then Martijn Schippers and myself will be discussing the deduction of import VAT. And that is a change towards the program that has been communicated earlier, but we found it more logical to place this here. After us, our Spanish colleagues will come into the arena, and they will talk about the taxable amount of import VAT. And then we will have a break. 10:45 approximately, 10:30 approximately, and then after the break, our German colleagues from the University of Münster will talk about the taxable event at import of e-commerce consignments, also a very topical issue. And then we go back to Italy again before the second break, and Sergio Messina from IBFD and Vincenzo Carbone from Bologna University will talk about distance sales. And then, after the second break, Olaf, so the European Commission, will talk about the fight against fraud with regard to e-commerce and new methodologies to track and battle those frauds. And then finally, from the Dutch Ministry of Finance, Sandiana Touni, who will discuss, also very important in my view, the VAT treatment of goods which are already under customs supervision or are still under customs supervision and not imported yet. And there you see, and we will hear that later on, very different approaches, I guess, also between member states, because member states do not have to levy VAT, but if you want, you can levy VAT on goods under customs supervision. So it's a minefield, I would say, if you look into the EU, how this is treated. That being said, I would like to give the word to my Italian colleagues. Gian Giacomo is starting. Gian Giacomo D'Angelo and Federico Tarini, who will come later. So good luck. If you have questions, of course, you can be uninterrupted. Huh?
Okay.
Yeah.
Okay. Thank you. Thank you. May I switch to? Okay. Okay. Sorry. presentation, perhaps? Yeah. Oh, slideshow. Okay.
You can do it.
So, okay. Good morning. Good morning to everyone. My name is Giangiacomo D'Angelo, and I would like, first of all, to thank Walter De Witt and Martin Schippers and the Erasmus University of Rotterdam as the coordinator of the entire program. I know how difficult may be the organization of this kind of event, so many thanks to Martin and to Walter for the hard work done. So I would give you today some general ideas, an overview of the interplays between VAT at import and customs law, and the starting point, as Walter said, cannot be but the fact that customs law and VAT at import are levied at the same event, and so importation is critical for both. Two levies, the same chargeable event. That will drive us to affirm that they are very, very similar. But in the end, if we go a little deeper, we may realize that there are some structural differences between VAT at import and customs law, customs duties. Customs duties are perceived as international trade tool. They are barriers, they are tools to protect our internal market, we may say. They are levied according to our customs code, our customs tariffs, and they are barriers to goods, to import goods, to protect our European internal market. On the other part, VAT on import is perceived as neutral. No distortion of internal market competition. General rationale of VAT at import is deemed to be the fact that goods from outside the internal market cannot go and reach the final consumer within the internal market without payment of VAT. That's the main rationale of the VAT at import. Neutral taxation. And neutral in another sense. Neutral, that means that VAT should not burden on business. And we have deduction for VAT, and I think Martin and Walter will present and will address these issues in their own presentation. I would like also to highlight that VAT, import VAT, is generally deemed to be compatible with WTO rules, generally, because it is a levy on internal-like products. So generally speaking, VAT at import, it is considered compatible. It is in line with the general WTO rules. This is the general framework of customs and the VAT, the rationale behind the two kinds of levies of taxation, but customs duties may be questioned if it is a real form of taxation. And I would like to advance also some differences in terms of revenue related, because customs duties are own resources of the EU. They amount to 80% of the EU budget, according to the forecasts and figures of the European Commission. So the correct implementation and application of customs duties is critical to the EU financial interests. There is a clear link between the proper collection of customs duties and the protection of EU financial interests and the EU budget. Clear, very clear. On the other part, VAT is connected to the EU budget with a more nuanced link between, it is true, we do have own resources of the EU budget connected to VAT, but it is a statistical revenue, it is a statistical way to compute VAT. It is not a very direct link between VAT collection of VAT, actual amount of VAT collected, and revenue due to the EU budget by the member states. However, nuanced is this link. We do have in the European Court of Justice a clear statement about the financial interest and the fact that the financial interest may be affected also by VAT frauds. So this is a very famous case, Ackberg-Franzen, and but other cases followed, the very famous Tarico case, in which the ECJ affirmed that VAT, the proper collection of VAT, is a matter of EU financial interest. And therefore, our conclusion is that the protection of the EU financial interests does matter for both proper collection of customs duties and the proper collection of VAT, internal VAT and import VAT. Well, after the structural and revenue-related differences, let's focus on convergence in EU law, in EU VAT and customs law. There are some links between the two regulations, and generally speaking, the VAT import regulation makes reference to the customs regulation from the point of view of wording of the legal texts. There are some clear links. The reasons of these clear links, in my opinion, are two. The first is an historical reason. VAT has been introduced when Customs Union was already in place. Customs Union dates back to 16, while VAT has been introduced in 70s, and it was quite natural for lawmakers when it came to introduce VAT at import to have a reference to the customs law already in force. So there is an historical reason why the VAT at import is shaped with reference to the customs law. And in some documents of the European Commission is also stated that for this reference, cross-reference, is also for practical reasons, because some overlaps and loopholes should be avoided between the two. We know in the European Union we have a very fragmented situation about the administration with the responsibility to proper collecting VAT at import and VAT at import and customs law. So this links was sort of tentative to reduce the confusion, reduce the occurrence of overlaps and loopholes. At least this in the documents of the European Union. So there are some expressed links between EU VAT and EU customs law. There are some connection. The first is the taxable event, for sure, as we said, as the starting point of this presentation. A taxable event for VAT is the importation. Of course, I'm referring here to the import VAT, not internal VAT, regardless of the status of the importer. We have the Article 17 of the VAT directive. That's the starting point. Then we have another clear link between VAT at import legislation and customs law, Article 71 of the VAT directive. The moment the tax must be paid is the same for VAT import and customs duties, and this is also valid for special schemes when payment of customs duty is suspended. Also, the payment of VAT by default is suspended. There is a clear link. It is expressly stated in the VAT directive in this article, Article 71, paragraph 1 and 2 of the VAT directive. But this link may cause some problems, particularly with the e-commerce, and I think our German colleagues and other colleagues are going to address these topics, the issues raised by this link and the correct implementation of this link between VAT and customs law. Thirdly, the taxable amount for VAT import is the value as regulated by the EU customs law. Again, we have an article, clear article, Article 85 of the VAT directive. But again, we do have some issues in this cross-reference link, and I do believe, I stop here because I do believe our Spanish friends and colleagues are going to address this topic in their presentation. I proceed to the conclusion. The result is the lack of expressed links for some aspects. Person liable, representative, we do have a lack of express link. We do not have a clear statement, clear information in the VAT directive. And so, in this scenario, the ECJ brought about more complexity because recently the ECJ, recently this year, the ECJ stated that there is no a general link between a VAT directive and EU customs law. It cannot be said that there is a general link between VAT at import and customs law. And what does it mean? I think that this drives us to the final question of my presentation. And this is the main question we have to try to answer. We have the responsibility as scholars to answer this question. How to cope with the aspect of import VAT not expressly regulated by the VAT directive? That is the main questions. In the silence of the VAT directive, what's the outcome? How to cope with this silence? Of course, I have my personal answer, which would be to make reference to the structure and to the logic of the inherent logic of both. That's why I started my presentation with the structural differences between customs law and the VAT on import. But of course, it is an open question, and I think the work today, the discussion today, is going to contribute to make clearer the answer to this question. So I finished my presentation. I stop here. Of course, I remain open to your questions, and I would give the floor to my colleague from University of Bologna, Federico Tarini. Again, thank you for coming, and thank you for following our seminar by remote. Thank you.
Thank you. Good morning. Just a second, I figure out how this works. Okay, perfect. Good morning, sorry. I'm not very technological savvy. First of all, thank you for joining us in this second seminar of the second cycle of Ecce. This is the second cycle, as we said earlier. It's always good to be here in Rotterdam because it's one of the most busy rooms. Otherwise, the participation is almost always in via streaming. So, my topic today is, like Professor D'Angelo, to introduce the relationship, the interplay, if you want to use terms familiar to us, between VAT and customs duty. Obviously, in 10 minutes, I cannot analyze every single aspect. What I will try to do is to take some of the consideration made by Professor D'Angelo and move them on a more practical aspect. The reason is because I want to try to understand, try to make you understand that there is no one size fits all. We cannot tackle e-commerce and issue like that with a single type of solution, but we must have a solution that take in consideration the specific aspect of each taxes. So let's start with the first aspect, which is the term customs duty. The term customs duty, as we all know, I think, can mean different things. It can mean ordinary customs duty, it can mean also anti-dumping duties, safeguarding duty, etc., etc. So we have a type of duty that is directly connected with tax purposes, but there are mainly other types of duties like anti-dumping duty and safeguarding duties that are connected to other objective. On the other hand, we have VAT. VAT does not take in consideration, at least for the most part, any other objective aside the financial interest of the single state. The main goal is to acquire the money that the state needs to function properly. Customs duty has undoubtedly a financial function. As Professor D'Angelo already said, customs duty are a key part of the EU budget. However, the main goal, the main purpose of customs duty are trade policy instruments. The main goal of customs duty is to regulate international trade, to regulate what duty enters in the EU, what the duty is when a product is safe, and to encourage third countries, like, for example, with preferential origin duty. From this follows the conclusion that it's extremely possible that we have for a same operation, for a same operation of importation of goods, for example, steel, which is a very controversial goods, I know, but bear with me, goods from, I don't know, China and Belize, we have the same operation, but in one case we have only VAT. In another, we have VAT and customs. And this is an aspect to take in due consideration when approaching especially preferential treatment and the like. Second aspect that we need to analyze is the legal instrument used. As we all know, customs duty are mainly a topic that is regulated by regulation. Sorry for the mouthful. Which have a general application, are binding in their entirety, and are directly applicable by the single member states. On the other hand, we have VAT, which are mainly regulated by directive, which are binding only in their results. Why is that? The reason is the different type of competence, the different types of competence that the EU has on the topic. For customs duty, we have a direct competence and an exclusive competence, aside for a couple of topics like sanction and procedures, administrative procedures. We have an exclusive competence of the EU under Article 3. paragraph 1. For VAT, we do not have an exclusive competence. However, we have Article 113, which allow harmonization of turnover tax, excise duties, and other forms of indirect taxation, but requires unanimity in the Council. This is also because, we will see, VAT is much more important than customs for national budgeting reason. As we said before, for customs duty are 75% for the EU budget. VAT is a small percent, as the rest is entirely for the national budget. It's not a irrelevant difference, because between unanimity and majority, between the different procedure, there is a vast in the middle, and it's very difficult to reach that unanimity necessary to harmonize some taxes. Therefore, there are maybe two speeds, as we saw with the different project or customs code. In less than 30 years, more or less 30 years, we have 4 projects of customs code, 2 of which are into force. And on the other hand, the last big directive on VAT is from 2006. Nothing new in between, at least as important as a customs code. Next, an important aspect is the relationship, at least from the Italian perspective, the relationship between the importers and the goods. For customs law, is the person who lodged the declaration or the behalf, is the debtor of the custom debtor. For VAT, the member state can determine who is responsible for paying import VAT. Obviously, if there are some conditions in the VAT directive. One of the key aspects, the aspect that's, in my opinion, is most interesting on this topic, is the role of the customs indirect representative. For the longest times in Italy, there was a huge debate on this topic. With the term "this topic," I refer to the eventual responsibility of VAT debt on the head of the customs indirect representative. Some national court said that the indirect customs representative was responsible, but the main solution at the Supreme Court level was that there is no direct responsibility due to the absence of a direct overlap between customs law and VAT law. The question was analyzed by the Court of Justice. The most important case in the Italian perspective is C71420, which said the VAT is on importation is a tax of an internal nature, so it is different. It is different from customs law. Therefore, there is a responsibility for VAT on the head of the indirect representative only if the national law says so. If the national law doesn't say so, there is no responsibility. So, what we did in Italy? We basically did a huge tax reform, which is concluded right now. There is also a huge intervention on customs procedure mainly, and we transform VAT in a border and customs duty, in a border duty, which resulted in the VAT responsible for indirect customs representative. The problem, what is the problem here? That the law does not regulate the other aspect. how to deduct the VAT paid by the indirect representative, what is the criminal liability, etc., etc. So I think that at least from the Italian perspective, there will be a lot of case law on the matter. Another key aspect is the relationship between customs law and VAT on the side of controls. First, we must understand that we have two phases of control for customs, and for VAT it's mainly single phases. Because in the customs law we have a lodging of a declaration, the control in line in Italy we say, and then the ex post control. For VAT mainly are ex post control, for VAT in general obviously, both on importation and internal VAT. Also for customs law there is a key role played by Olaf and the European institution in general. All through there is a decision of the Supreme Court of I think January or February 2024, Italian Supreme Court obviously, that said the Olaf indication, Olaf investigation are not enough to start and to start an assessment on the national economic operator. Just a side note that is interesting to me. In VAT, the role of European institution and Olaf is much more. It's a little role, if we let me say that. So, also, and this is one of the key aspects that I want to underline, for customs law there is a progressive standardization of control and procedure. Control procedure, both informatical and traditional procedure. For VAT, there is still a little of difference from member state to member state. The rationale here is the same as always. One, the customs law are EU or national resource. VAT are key part of the national budget. All through the court, in the Tarico case, as Professor D'Angelo says they are relevant for EU financial interest. But on the political aspect, if you let me say so, VAT is always saw as an internal tax. Because 0.1, 1. I don't remember the exact percentage of VAT for EU budget, but are not so high. So, also important in the difference of control is the time limit. From an Italian perspective, ex post control or a posteriori, after the release of goods in free circulation, can be made in 3 years. VAT assessment in 5. So we have 2-year difference, and as the Spanish colleague will say, it's much more complicated where the issue is the value, the tax base for VAT and customs law, which we could have a modification or assessment on the value for VAT based on assessment on custom value, but I cannot ask for more customs duty, but I can ask for more VAT, which is a kind of a problem in my opinion. Just a quick analysis of right of deduction, which will be analyzed, I think, after my presentation with the Dutch one. Okay, yeah. Customs law remain the responsibility of the declarant. Generally, the price is transferred to the final selling price of the price. The customs duty is transferred to the final selling price. VAT, there is a right of deduction. What is the rationale here? The rationale is that customs law are general taxes on consumption aimed at creating the effective internal market, but also are disconnected from the sale. It doesn't matter if there are 20, 40 or 15 sellers. It doesn't matter if I have the idea of selling the goods. If I bring the goods and I release in free circulation in EU, I have to pay customs duty. On the other hand, VAT are directly and intrinsically connected with a sale of the good. I need to be an economic operator to use the right of deduction. And VAT, we can say that while customs law look primarily outside of EU, VAT looks primarily inside of EU, obviously, and both of them with the objective to protect and create the single market. So, just a quick, a couple of considerations in order to bring back to my initial statement. When we decide to tackle new challenges like e-commerce, new challenges like sales of distance goods, which will be a topic today, we need to take in consideration three factors. First of all, there is undoubtedly an inherent connection, but not an immediate overlap. Overlap, I think, also the concept of importation. We will see it's not perfectly similar due to different in territory. The concept of deduction. There are a lot of things that we need to take in consideration when we tackle these problems. Therefore, there is no one size fits all. There is no solution that will be enough for customs law and a solution that will be enough from a VAT point of view. We have to have a unique solution for VAT and a unique solution from customs law, at least in my opinion. However, one of the critical aspects that we must tackle before tackling everything else is the procedural problem, because there is more of a procedural problem than a substantial one right now, due to the difference of legal instrument used. So, if we want to, because it's a new regulation is useful only if it can be assessed. If I cannot do an assessment, if I cannot control if the regulation is implemented, it's not useful. So if you want to reach this goal, we need to have a procedural, at least harmonization, if you cannot have unification. Thank you very much.
So then we continue this morning with a presentation about the deductibility of import VAT, and I will do that presentation together with Walter. I think this is a very topical issue because if you cannot deduct import VAT, then it's a cost. So it's a very relevant topic for a lot of businesses, obviously. And that have also resulted in several court cases for the ECJ, but also for local court cases, and we will address a few of them. How is our presentation structured? We will start with the basics. So who is paying import VAT and who can be held liable for paying the import VAT before turning into the topic, okay, but who is entitled to deduct the import VAT? And that we are going to approach from three perspectives. We start with the legislation. Then we have some court cases of the ECJ and also a court case of the Supreme Court of the Netherlands. We are going to look to a position paper of the VAT expert group, and then we have some considerations about, okay, but what about companies that import products because they are going to lease those products or they are like in a toll manufacturing setup. So those will come at the end. So without further ado, so who is paying the import VAT? So if we move a product to the EU and we import that product, it goes without saying that typically it's the declarant that is presenting those goods at customs, and then they make that payment from customs duties, but also the VAT. or it is his representative that present the goods on the behalf of another company, and yeah, then the payment is made. And what you then typically see, if there is like a representative, that they issue an invoice, and on that invoice the customs duties and VAT are basically on charge to the one that should pay the VAT. That is what we see in most cases. It can work differently sometimes in other member states. Also, in case there is a reverse charge mechanism in place, which we have, for instance, in the Netherlands, what we typically refer to as the Article 23 license. We have similar mechanisms, for example, in Belgium with the license 14,000. In France, it is mandatory to reverse charge on import. So, so you can get from my presentation already that it's not that all member states treat this the same, but here it all starts. If we then look at the question, okay, but who can be held liable for the import VAT? That's a whole different ball game, because then you need to look at what is in the VAT directive. And if you have a look at the VAT directive, in particular Article 201, you see that basically it's up to the member states to decide who can be held accountable for the import VAT that is incurred at import. And that also results then in the fact that if you import in multiple EU member states, that you need to look at every piece of VAT legislation in those member states to see who can be held accountable. And that is also why there are like certain court cases about it, and this court case, which is here on slide, was already referred to earlier in the presentation of Federico, the UI case, where you see an indirect customs representative in Italy importing those goods, and then the goods were released for free circulation, or was an infringement actually. And then the question was, okay, can the indirect customs rep be held accountable? And then the court says, well, if we look to the customs legislation, for customs duty, they can be held accountable. That's explicitly stated in the Union Customs Code. But import VAT is not part of the customs duty, so it is not automatically that an indirect customs rep can be held accountable for the import VAT. Then you need to look at whether there's a specific explicit reference made in the VAT legislation. And that's also probably why there's now a reform going on in Italy, as I saw just on slides, that they are going to make explicit that an indirect customs rep can be held accountable. And if you look to the Netherlands, for instance, there's still a debate going on whether there is indeed an explicit reference, because there's Article 22 in the Dutch VAT Act that says, well, if you import products, then you should follow the customs rules. That is, to put it in simple words. But is that explicit enough to also hold accountable an indirect customs rep? And there are different opinions about that. So that is for who can be held liable for the import VAT. But that is a different question from the question, okay, but who is entitled to deduct the import VAT? And then two articles are of importance. So the first one, Article 168, and that says that it should be at least a taxable person. Now that is, I think, very obvious for most of you, because you should be a taxable person, otherwise you will not have the right to deduct import VAT. But it does not really say what the conditions are. Then you should move to Article 178, and there you see a few conditions stated under which circumstances you can deduct the import VAT. And then you see that you should hold the import document specifying the person that wants to deduct the import VAT, him as consignee of importer. But then it becomes already a little bit tricky, because what does that now exactly mean? And that is not really explicitly stated in the legislation. And then there are certain court cases that try to interpret these provisions. And one of the first ones that we would like to address is the DSV case in this perspective, because that was a case that addresses this question to a certain extent. It was about goods in Denmark. Those goods were in a free port, and then they were put on the transit to Sweden. But the thing was, they went back actually because when they were in Sweden, they were rejected by the recipient of those goods and they sent them back to that free port. But what is important here is that neither in Sweden and also not on return in Denmark, the goods were presented to the customs authorities. So there was actually an infringement of the customs procedure. And therefore, and ultimately the goods were shipped again to Sweden and then everything went correctly. But for the first instance where the goods were shipped to Sweden and back, there was an infringement because there was not a bill of discharge being presented to the customs authorities. And therefore there was an infringement, a customs debt, and also import VAT needed to be accounted for. And then the question came up also, okay, but is then that transporter entitled to deduct the import VAT? And the basic, to put it short, no. Because they are the transporter, but they could not be regarded as the importer nor the owner of the goods that they moved from Denmark to Sweden. So you see already a little bit of an interpretation of that Article 178 that goes into the direction that you should be the importer or the consignee, and here they also seem to suggest that you should maybe be even the owner of those products. Now that is obviously always a little bit open for debate. Should you really be the owner of the goods, or are there other instances where you can also deduct the import VAT without being the owner? And I think, Walter, you were going to address that question maybe also later on in the presentation. So we go to the Windel case.
The Windel case is actually not a case, you could say. It's a decision of the court. True. So they didn't hear parties or whatever because they thought, the answer is actually straightforward and very simple. So we don't need to do a whole court case on it. But what is it about, actually? It's about... hello. It's about products which were actually imported into Slovenia, I think, or Slovakia. I always mix them, but I think it's Slovenia. And the goods were actually owned by a Swiss company. And they had those goods being repacked in Slovenia. And the importer, or the person filing the import declaration, etc., was Windel, the logistics service provider, who actually did the repacking, etc., on behalf of the Swiss company. So they also incurred the VAT on import, and they deducted this VAT on import on their VAT return. And the question was, is that correct? Are they entitled actually to recover this import VAT? Yeah, here we see a nice. You see, they are actually repacking on this slide. And then they went back, of course, to the EU afterwards. Okay, yeah. And what did the Court of Justice say? Now I need to have my glasses because otherwise I cannot. But the question was more or less: do you need to be an owner, as Martijn said, to recover the goods, the import VAT? And other questions, of course, is under Article 168E. The deduction of import VAT allowed if the import goods are used for the purposes of the taxable persons, taxable transactions. And that's a little bit wider, of course, than being only the owner. We will see that in a minute. And also, should there be a direct and immediate link between the goods purchased and the output transaction? Like being the fact that the costs components must be reflected in the price of the output supply. And what the questions more or less cover the traditional conditions, you could say, that the Court of Justice uses when they determine whether or not input VAT can be deducted by a business. And so a normal business involved in transactions within a EU member state. Also on that business, these conditions, these questions are asked before that business is allowed to deduct input VAT. And the court is actually quite straightforward because it says that it's not possible to deduct the import VAT when the importer does not dispose of the goods, so is not the owner, and when the upstream import costs are non-existent or are not incorporated in the price of the downstream operations. And yeah, that's of course not the case here, because Windel, the logistics service provider, is only a service provider, and the costs of the goods imported are not reflected in the fees they charge for their services. Then it means, and that's what the court is making clear, that they cannot recover this import VAT. And then in the Netherlands we also have a case which came actually 3 years ago now. The stolen nickel case. Yeah, it was a warehouse keeper, and in the Netherlands, the parties are always anonymous in tax cases, so we don't know the name of the company. So that's why we call it the stolen nickel case. But it was warehouse keeper, and they stored all kinds of metals in a customs warehouse. And at a certain point of time, nickel was stolen actually, which of course was not owned by the warehouse keeper. But the warehouse keeper, of course, was approached by the customs authorities who wanted to levy import duties, and also, of course, simultaneously the import VAT. And then, of course, the warehouse keeper said, okay, that's fine, but I want to deduct this import VAT. And the court, the Supreme Court, nice animations again. The Supreme Court said actually, the warehouse keeper only has the right to deduct the import VAT if he procured the goods within the framework of his business activities, which of course is not the case, or he used the goods at the time they were imported within the framework of his business activities, which is also not the case because he's storing it on behalf of somebody else. So what actually happened? So this means actually this decision of the Supreme Court means that only the owner of the goods can actually deduct the import VAT. There was one very specific thing here as well, because it is nickel. In the Netherlands, there is a compulsory application of VAT deferment on import towards the owner of the goods. And that argument was actually not used in this court proceedings, and as a result, the warehouse keeper lost. But had they used this argument, then the court could have had no other decision than that the import VAT should be levied from the owner, who would then be able to recover this import VAT. But this is very specific Dutch situation. But apart from that, the Dutch Supreme Court follows what the Court of Justice is doing actually in these kind of cases. And then we have the VAT expert group. They also had an opinion on, in their 94th session, had an opinion on the recovery of import VAT. And what they said is import VAT incurred pursuant to Article 201 of the VAT Directive can be recovered only if both shall not be entitled to deduct. I have to read it carefully. So there is no deduction of import VAT if both of the following conditions are met. So if both are met, then there's no deduction of import VAT. So the first is you have to be an owner. If you are not an owner, then you have a problem. Or you may be saved by the second condition, that the cost of the goods have a direct and immediate link with your economic activity. And as we will see, we will now come into some, go to some examples to more or less brainstorm what it means in these examples. As we see, we will see this second condition will be, in my opinion, fulfilled in certain cases where tax authorities might take a different approach. Because, for example, the UK is not a member anymore of the EU, but they have a long-standing vision for years already that only the owner of the goods can recover import VAT. And I think that's the big question. Is that true? Is that a true statement? Or should we say, no, there are more possibilities? And I believe that there are more possibilities. And the best thing to do is if we look at these kind of examples, for example, a lease transaction of an airplane or whatever, or in the Netherlands we actually have a case of a lease transaction with a yacht, a very expensive yacht, which was imported in the Netherlands by a yacht broker. So he was hiring the yacht and then hiring it out again to somebody else, so leasing it and then leasing it out again to somebody else. And the question was, can he recover the import VAT? Because it was a how do you say it? A situation which approximated abuse of law. So the tax authorities were trying to recover this import VAT. And it came to the Dutch Supreme Court, which said no, he can deduct the import VAT. And the reason behind that is that he is using it in the course of his business. He is hiring the yacht and then hiring it out again to somebody else. So he's using it in the course of his business, even though he's not an owner. So you cannot say, in my opinion, that you need to be an owner. Because in this situation, you also have a business purpose, you could say, for importing the goods. And also, you could say, from a customs perspective, a lessee who is importing or bringing goods, in, a car or an airplane or whatever, into the European Union, he is required to file an import declaration. Just like an owner. So there's no reason to assume that he should not be allowed to recover import VAT. The second situation is the situation of a toll manufacturer. And what do I mean with that? That's of course, I think most of you have seen it in practice, but that's where, that's actually the Windel case, you could say, where an owner of the goods ships them to a manufacturer somewhere in the EU, and the goods are imported, for example, to undergo processing or whatever by that manufacturer. And then what you see often, or saw often maybe, but that the manufacturer was actually acting as the importer, even though it was not the owner, and also recovering the import VAT. And that, I think, is a situation, of course, which will not be possible anymore because of the Windel case. And here we also have a very strange situation in the Netherlands because there's still a old decision of our State Secretary of Finance allowing the manufacturer in certain situations to recover the import VAT if he's performing certain activities under customs supervision, etc. Then it's possible to still recover this import VAT if you are a processing company or a manufacturing company. It hasn't been withdrawn after Windel, actually. And then the third example is the warehouse keeper of consignment stock. I think we will have the same situation here because the warehouse keeper is also not the owner and does not have, if those goods are, for example, stolen or he's going to import them, the costs will not be reflected in his fees, his service fees for the warehouse activities. Then the other question, and that's, I would like to finish with that. That being said, that in certain situations, logistic service providers can be confronted with import VAT, which they incur because something went wrong or whatever. But with regard to goods they do not own, but goods that are owned by their clients, the big question, of course, now is what happens if this warehouse keeper or this manufacturer on charges the VAT on import that he has incurred to his client, who is actually the owner of the goods. And I think you can argue that in that case, the owner of the good is entitled to recover this import VAT. Because it's actually the same situation that you see already when you use a customs representative as a logistics service provider, as a importing company. What you see in many countries, also sometimes in the Netherlands still, even though we have this deferment scheme, is that the customs agent receives the notification from the customs authorities of the import duties and import VAT incurred, and he then on-charges it on an invoice to his client, the owner of the goods, who can recover the VAT with that invoice via his regular VAT return, his periodical VAT return. So why wouldn't it be different in this situation where we have a theft from a warehouse or whatever, and the warehouse keeper is being held liable for the VAT? Why shouldn't he be able to on-charge it to his client, and why shouldn't the client be able to recover this VAT? We have to wait because there are no court cases about it, but I think that an argument for this would be a very strong argument actually, and could win it in the Court of Justice ultimately. That being said, I've come to the end of of our presentation. And are there any questions? Then feel free. Yeah, David. Yeah. Okay. So the question from somebody from Davide in the audience is if goods are stolen or lost in a warehouse, isn't there a problem because there is no consideration for those goods? Because nobody has paid for those goods, so couldn't tax authorities take the view that they were actually not used for business purposes? Because that's actually what you're saying. That depends on, because there are provisions in the VAT directive allowing member states to be able to demand businesses to revise their input VAT claims in case of theft, for example. But I think, at least in the Netherlands, and I know many other member states do not have this implemented. So what the argumentation is that these are costs, you made costs, but they fall then within your general pro rata, so to say, your general business right to claim VAT, to claim back VAT, even though there's no direct link with a supply. Yeah. Okay. Then I would like to thank you for your attention, and I would like to ask my colleagues from Spain, Santiago Ibanez and Jorge Mila, for their presentation on the taxable amount.
Thank you. Okay, good morning. I'm going to present on VAT tax base on imports, and then Jorge will present on other magnitudes that are relevant at importation, customs valuation, the VAT tax base, and also intrinsic value, what is the role of each. I'm going to focus on the general rule on how VAT tax base on imports is determined. As Giangiacomo said, we first look at Article 85 of the directive that refers to the customs value. So the customs value is the starting point. This means that all the problems regarding the customs value, that some of them we covered in Valencia, are relevant also here because VAT refers to customs value. Also, a question arises, what customs value? Giangiacomo, or no, it was Federico. They said the statute of limitations is not the same. For custom duties, it's 3 years. For value-added tax, it's a different period. It's a national period. In the case of Spain, 4 years. But if there is an action, the 4 years period is rebooted. So it could be anything. If they start audits, another audit and another audit, it could be many years. So what customs value? The customs value that was used for custom duties, or the customs value which is determined as the correct customs value that could be different from the value for customs duties purposes. It looks that the reasonable answer is the correct customs value. So the customs value you use for custom duties could be different from the customs value you use for VAT, because when you check the customs value, you cannot change the amount of the custom duties. Then Article 86 provides that on top of the customs value, we need to add 2 elements. The first one is taxes, duties, levies, other charges, everything, whatever the name, due outside the member state of importation, and those due by reason of importation. So out and in the importing country, excluding VAT. And then another element, incidental expenses, such as, it's an open list, illustrative. We don't know what are incidental expenses. We only have the illustration, commission, packing, transport, insurance, up to the first place of destination for which we have a legal definition, or to another place of destination within the EU, if that other place is known, by whom? Is known at the time of the chargeable event. So we don't know the place. Depending on the case, first place of destination, by the way, the first place of destination, there is also an alternative, or if it's known, another place we don't know. And then we have Article 87, providing that discounts for early payment and other discounts which are obtained at the time of importation should not be included in the VAT tax base. Okay, the same rule would have, this rule is mostly unnecessary because the same rule applies for custom duties. Discounts for early payment are not included in the customs value, and discounts that are provided in a contract before lodging the customs declaration are not included in the customs value. So this provision is mostly ineffective because the starting point is customs value, and the customs value, we can assume, will not include those elements. So with a recap, what we have is customs value plus taxes plus incidental expenses, and we exclude the discounts. Let's go to the present. And I went to the first rules, the second directive, 1967. The first directive was the directive providing member states should have VAT. And the second directive was the first directive providing rules on VAT. In this first directive, we have a very short provision. In the case of importation, the tax base is customs value plus taxes. Customs value plus taxes due by reason of importation. They don't say out of the member state, only taxes due by importation. In the new legislation, it's not only due by importation, it's also due in other states. And they provided as an option for member states, member states, you may add incidental expenses. You may. It was not mandatory. You may add incidental expenses. And the illustration is packing, transport, insurance, not commissions. Packing, transport, insurance. All those elements are included now in the customs value. So as it was, this provision would be ineffective because packing, transport, insurance, all are included in the customs value. And it was an option for member states. Okay, it does not mention commissions. Commissions are now included in the illustrative list. Then the second relevant precedent is the original version of the 1977 directive, Directive 77 of 388 of the year 77. And what we have is basically the same we have today, but with some relevant differences. First of all, it's customs value, taxes, and incidental expenses. But the starting point was not properly customs value. The starting point was price paid or to be paid, where this price is the sole consideration, not the customs value, but the price, or otherwise the open market value. And then it provided member states are allowed instead to use the customs value, but the customs value according to the Brussels definition of value, not the customs value according to the customs valuation code. So the starting point was not properly customs value. It was the normal price, normal market price. Then adds taxes due outside the country of importation. In the 67 directive, taxes paid abroad were not included in the base, but in the 77 version, they include also taxes paid abroad. Then they add commission to the illustrative list of incidental expenses, and they are no longer an option. In the 67 version, incidental expenses may be added according to the member state legislation. In the 77 version, incidental expenses must be added. We find in the areas of the directive that they say we need to increase harmonization. So probably they decided, let's harmonize. They have the choice not to include any incidental expenses, or that every member state includes incidental expenses. And they chose all countries include incidental expenses. And they added commission to the illustrative list, not only packing, transport, and insurance, but also commission. And up to the first place of destination, but they added member states may, it was an option, so harmonization did not apply here. Member states may take another place if that place is known at the time of the chargeable event. But initially it was an option for member states. It was not mandatory to do that. So when we recap, incidental expenses, I'm going to focus on incidental expenses. They were optional for member states, not mandatory, as an element of the tax base. Arising up to the place of destination. It was not to another place if it is known, in the 67 directive. In 77, in order to harmonize, incidental expenses are mandatory, they have to be included. Commission is added to the list of incidental expenses, and they made optional whether the first place of destination or another place if the other place is known. Now, that is not optional, it's mandatory, and if that other place is known by whom? And I'm going to say, what about service providers? Service providers, we're going to see, need to know. Are service providers in a position to know that place of destination? So, in my view, incidental expenses is a source of uncertainty. What incidental expenses? We don't have an exhaustive list. It's an open-ended list. And I bring cases from Spain, and there are many, many elements of cost where you don't know if it could be regarded as an incidental expense or not. Should we add that to the value of the goods, or should that be an independent supply of services? And by the way, very convenient for tax authorities. Whatever you do, you are wrong, penalty. Penalty, your invoice is incorrect. Your invoice is incorrect because you are charging VAT when you shouldn't, or you are not charging VAT, you should charge VAT. So incidental expenses is not clear, and when you don't act according to the view of the tax administration, for starters, you have a penalty because you have breached formal rules regarding VAT, at least a formal breach. Take into account that those incidental expenses are exempt from VAT when included in the value of the goods. In order to avoid VAT on both, If the value of the service is in the value of the goods, the service is then exempt. And this means that the supplier needs to know, because if the service is included in the value of the goods, the invoice of the supplier must be without VAT, because it is exempt, the service. While if the service is not included in the value of the goods, the service supplier must charge VAT. And we don't know what are those incidental expenses. And what about the place of destination? What if the service supplier doesn't know that at the time of the chargeable event, they know a further place of destination? Very briefly, comparative law. I checked, for example, Colombia. In Colombia, of course, VAT originated in Europe. Other countries has been very successful. Many countries have copied. For example, Colombia, for the VAT tax base, it is customs value and custom duties. Note, customs duties, not all taxes on importation. We add taxes on importation and taxes in other country on the goods. In Colombia, it's only customs value and custom duties, and not taxes of any other country. Same thing for Uruguay and many Latin American countries. I bring these examples. And another example I found interesting, I also checked Canada. Canada doesn't have VAT, but they apply the same rule for general sales tax. So Canada is also the same. And I bring the case of Australia because it's interesting. What they do in Australia is customs value, but because the customs value does not include transportation, unlike in Europe, we add transportation in the customs value. In Australia, they do not include transportation. And what they do is they add transportation for VAT. So it's the customs value that does not include transportation, plus transportation, plus custom duties, not generally any tax, custom duties. And then they have an excise tax on wine. Okay, if it's a product included in the scope of wine, they also include the excise tax on wine. So very similar and more simple than the European rule and less uncertainty. So I would like to end with a proposal. I think this rule merits a reconsideration. I'm afraid that we have been copying in the different directives without reconsidering, does it make sense to include the incidental expenses? Because if they are not taxed in the value of the goods, they will be taxed as an independent service. So what is the merit of including everything in the value of the goods? What are we obtaining that we would miss if the tax base were more simple? I don't see the gain. I only see legal uncertainty and the opportunity for penalties that are undeserved. So in my view, we should reconsider, and my proposal would be the tax base for VAT should be customs value plus taxes on importation, other than VAT, and not taxes from a third country. Taxes on importation in the in the EU. Okay, and that would be all from me. Thank you for your attention.
Thank you, Santiago. Good morning, everyone. Okay, this is the main index that I'm gonna show you today. We're gonna make a brief introduction, then we'll see the main definitions. We have already seen some of them, so we'll focus on the new ones. Then we'll go to the elimination of VAT exemption for imports of low-value goods, and then finally we'll see how does it end in the customs declaration. Okay, so very brief introduction of what is taking place. Well, there's been a strong growth of e-commerce in the last few years compared with the normal trade, and there have taken place so many regulatory modifications in order to solve this specific problem. What regarding to VAT has taken place is they have to ensure taking into account all those particularities of e-commerce, but also we had to obtain those resources equivalent to the normal trade. So what was taking place is, in the normal trade, all the taxes were being paid in terms of VAT, and in e-commerce, some of those taxes were escaping from taxation. So that was the huge problem. So now the the issue was that it was easier or it was cheaper to buy from third territories or third countries than within the European Union. So in order to understand all those new regulations, all those modifications, TaxSud has issued some documents, which are the VAT Guide in 2022, the Customs Guide 2021, and finally the Product Returns Guide on 2022. Okay? The key definitions of these modifications, we have already seen we have already seen VAT taxable amount, explained by Santiago, and we all know customs value. So what we're going to introduce is the new term, which is the new concept, which is intrinsic value. Intrinsic value, according to Article 1, Section 4 of the UCC Delegated Act, it says for commercial goods, it's going to be the price of the goods themselves when sold for export to the customs territory of the Union, excluding transport and insurance costs, unless they are included in the price and not separately indicated on the invoice, and in any other taxes and charges as are ascertainable by the customs authorities from any relevant documents. And for goods of non-commercial nature, the intrinsic value is going to be the price which would have been paid for the goods themselves if they were sold for export to the customs territory of the Union. Okay? Are those terms relevant for VAT? Absolutely. For example, in the first one, the intrinsic value is going to be relevant in order to know which is going to be the limit, the amount of money when you have to pay VAT tax. It's going to be 150 euros, and if it is private to private consignments, it's going to be only 45. And for example, custom value is going to be relevant for calculating customs duties. It's going to be the first component of the VAT taxable amount. And VAT taxable amount is going to be relevant for calculate VAT itself. Let's see what has changed. Okay, so this is the situation before July the 1st or until June the 30th, 2021. So in terms of customs, there were two thresholds for customs relief. For any consignment of an intrinsic value not exceeding 150, and for private-to-private consignments, as we have seen, up to 45. Okay? In VAT, there were two exemptions. The first one was for goods with a value not exceeding 22 euros, and for private-to-private consignments, up to 45. Okay? So according to the new rule, we don't have anymore the exemption in VAT for goods with a value not exceeding 22 euros, okay? And we keep the ones in customs. So that change, we're going to see in an example, that change, okay? So at the very beginning, we got the intrinsic value of this is an example, we're importing adult sports socks. The intrinsic value is going to be 18 euros. Okay, in the first column we got up to 30th of June. Then we're going to have to add handling, transport and insurance. It's going to be 2 euros. And our value for custom purposes, our customs value is going to be 15 plus 2, which is 17 euros. As the intrinsic value is going to be lower than 150, we're not going to have to pay any customs duty. And our value for VAT purposes is going to be 17. So the VAT that we have to pay, as it is lower than 22, is going to be 0. Okay? We will add, this is for illustration purposes only, it's 10 euros for a courier handling or post. That's going to be 10 euros. Import charges is going to be 0, and then total cost is going to be 27. From the 1st of July and on, we got the same amount, and the intrinsic value is going to be 15. The handling, transportation, and insurance is going to be 2 euros. And the value for custom purposes is going to be the sum of both. It's going to be 15 plus 2, so 17. Again, the same customs duty, the relief, because it is below 150 euros. And the VAT value is going to be 17, 15 plus 2. In this case, VAT is going to, well, we have chosen 21%, which is the one in Spain. I think we got, which one do you have? 19 in, 19 in it's the same in here. Where is, 19 is in Germany, no? Okay. 23 in Ireland.
27.
How much?
Hungary is 27.
27. Okay. So then, as we are not applying anymore, the rule of the RIF of 22 euros, you have to pay 3.57 euros. We add again post and courier handling fee, that is 10 euros, and also now the total import charge is going to be 3.57, which is going to be the VAT on importation. We're going to see now an example when you're buying a good, when a customer is buying a good using e-commerce from a third country or territory, okay? And we got more or less the same one, adult sports in the same consignment. It's going to be the adult sports shorts and the socks, which they have an intrinsic value of 55 euros, okay? Adding handling, transportation, and insurance, we add 10 euros more, and we got a value for customs purposes, the custom value of 65 euros. As it is, it's got an intrinsic value of 55, which means it's below 150 euros, then we don't have to pay customs duty. We have added, just to show you where the incidental expenses, in case there were some incidental cases, we have considered 5 euros in here. So by adding the intrinsic value plus the handling, transport, and insurance, plus the incidental expenses, we got a value for VAT purposes of 70 euros. Then, as we're paying now VAT from zero, we have calculated 25% of 70 euros, which is 14.70. Then we added the same post and courier handling as the other example. And total import charges is going to be 14.70 euros. And the total cost is going to be 65 plus 14.70 and 10 euros, which makes a total of 89.70 euros. Okay. So what were the consequences? We got figures of the first 6 months, and those were the consequences according to the Commission. There was a wide revenue generated by these lower shipments imported goods, which when it came into force for the first 6 months, which exceeded 2 billion euros. Okay, so a huge income. Over half of the total has been managed through this new system, the IOSS system, and those controls, again, implemented to avoid fraud, to avoid fraud to undervaluation, had allowed the collection of another 270 million euros, so big amount of collection. Okay, finally, which are more or less, in a very brief summary, the changes in the custom declaration. They have added a column, which is the column H7. If your custom declaration has got an intrinsic value higher than 150 euros, you have to submit the complete one. But in order to make easier the VAT on the importation of this kind of consignments, the e-commerce ones, when there's an intrinsic value lower than 150 euros, or if it is between privates, what they call private-to-private consignments, up to 45 euros, you only have to submit this reduced data column, which is the H7 column. Okay? Finally, you cannot use it to import goods that are subject to any prohibitions or restrictions. And that's all for me. If there are any questions. Yeah. Morning. ¿Cómo estáis?
All that you focused mainly I have a more general question concerning the value of the rules. Now, the rules that are applicable one of the VAT directive. But there's also a general rule that is the open market value.
It was in the previous VAT directive, the 77 directive.
The open market value is also mentioned in the...
It's no longer in force now. It was in force in 77. Sorry?
Open market value is the general rule applicable also by the current directive.
On imports, it's customs value.
Yes, but as general rule for
But not for customs value.
but not for import, but the general rule that is applied by imports is the open market value. So there is not an interaction between the two rules. Or, I mean, the customs, the rule that is applicable in as an interpretation also by the open market value. In your opinion, or there are two separate words?
Santiago, can you repeat the question for the people at home?
Sorry.
Yeah.
Diego is asking whether the normal market value, which is, he understands, a general rule for valuation of the tax base in VAT, the general market, the fair market value should be a rule applicable also for VAT on imports, and what would be the relationship or consistency with the customs value? Okay, I am improvising. I have not reflected on this, but I don't think we should apply that rule to VAT on imports because in fact, the rule of normal market value was in the previous directive, and then it was suppressed. I understand that to align with the rules of the Customs Valuation Code and with customs rules, with the WTO rules. So the fact that it was explicitly suppressed, the normal market value for VAT on imports, I think is a strong argument to conclude that you should not apply that general rule you referred to in the case of VAT on imports. VAT on imports, they have their own rule, and fair market value, I think, doesn't apply. That rule was intended, I understand, for fraud in transactions within the internal market, not so much with the aim of fighting fraud on imports. So that would be another argument, that the reason why that rule was introduced was alien to imports. But I am improvising. I have not reflected properly on the question you are asking. Welcome.
Okay, thank you very much, Santiago and Jorge. We have come to the end of the third presentation, and that means that we now have a break of 15, 20 minutes maybe to have coffee. It's in front